Hey everyone, welcome back to Corporate Decoder, the place where we unpack the confusing world of corporate finance. Today, we're drilling into SCWorx Corp and a deal that is making some waves in their shareholders' wallets, or at least their right to future earnings. It looks like SCWorx is doing some financial housekeeping, and we're here to see what it actually means for you. Alright, let's start from the top of this report from SCWorx Corp. This is a current report basically telling us about important events that just happened. The company itself, SCWorx Corp, is based in Delaware, and you can see their file number and their tax ID right here. Now, usually we skip over contact details, but this number seems quite prominent in the filing, perhaps indicating how they communicate important updates. They are also letting us know they are not an emerging growth company, meaning they have to stick to all the standard rules without any special extended grace periods for new accounting standards. The main event here, the big news, is all about an agreement SCWorx Corp entered into on the 17th of September 2025. This agreement is with holders of their existing warrants. Think of warrants like options they give someone the right to buy company stock later at a set price. SCWorx convinced these warrant holders to use their existing warrants right away, and in return they are giving them new warrants, almost like a bonus. By getting these existing warrants exercised, SCWorx received about $721,574 in cash. That is decent money for them. The exercise price for these shares was $0.3496 per S-share, which means they sold a little over 2 million shares of their common stock. Now, for the interesting part, for every share that was bought using the old warrants, SCWorx is giving out 2 new warrants. This means they are issuing a huge number of new warrants, more than double the shares that were just bought. So for the 2 million shares sold, they're reissuing over 4 million new warrants. These new warrants can only be used after the company gets approval from its shareholders. This approval is needed for a couple of things. First, to make sure they can issue enough shares under NASDAQ rules. Second, to actually increase the total number of shares the company is allowed to have. This shareholder approval step is crucial and can take time. What is also interesting is that because of these agreements, SCWorx is restricted from selling any more stock for 90 days after they get that shareholder approval. This really locks them in and shows how important this upcoming approval vote is. SCWorx also promised to file paperwork, specifically a registration statement, so that the shares from these new warrants can be legally resolved later. They have to get this approved by the Securities and Exchange Commission, or SEC, fairly quickly after the shareholder vote. If they mess this up, they have to pay penalties, which is called liquidated damages. The money they got after fees is going towards general company needs like keeping things running and other everyday expenses. The new warrants will have a slightly lower exercise price than the old ones, at about $0.31 a share. Also, if the company does things like stock splits or combinations, the number of shares and the price for these new warrants will be adjusted. And if something big, like a merger, happens, the warrant holders get what they would have gotten if they had exercised their warrants just before that big event. There is a limit on how many shares one person can own if they exercise these warrants. It is capped at 4.99% of the company's total shares. This is to prevent any single investor from gaining too much control too quickly through these warrants. They're also mentioning that the details of these agreements and the warrants themselves are fully laid out in the exhibits to this report, which you can go and read if you want every single word. It's important to note that these new warrants and the shares they represent haven't been registered with the SEC. Under the usual laws, they were issued using a special exemption. This means they can't just be sold easily in the US without either registering them properly or having another exemption. This ties into the next section, which is about unregistered sales of stock. All the information about the shares sold today and the shares that will be available from the new warrants is already covered in the previous section, so it is all connected. Here is a look at the specific documents they filed. We have the form of the new warrant itself, which lays out all these rules we just discussed. And we have the form of the agreement that triggered all of this, the warrant inducement agreement. And finally, the cover page interactive data file, which is basically a machine readable version of the report cover. And then we have the signatures showing that the company CEO Timothy Hannibal has signed off on this report, confirming it is all accurate as of the 19th of September 2025. Now, for my take on SCWorx Corp and this warrant deal. On the one hand, they managed to get a quick infusion of cash, around $721,000. That is definitely a positive for any company, especially if they need working capital. They are also effectively getting their shareholders more involved by issuing a lot of new warrants. This could potentially bring in even more money down the line if those warrants are exercised. However, there are some significant points to consider. The fact that they're reissuing double the number of warrants compared to the shares they just sold is a big deal. This significantly dilutes the ownership of existing shareholders. If you own stock now, your piece of the company will be smaller once these new warrants are exercised. The company is also restricted from selling more stock for a period, which could limit their options if they suddenly need more capital or want to act on other opportunities. Plus, the entire process hinges on getting shareholder approval, and we don't know if that will be a smooth ride. If they fail to get that approval or rush the process, they could face penalties. The company's stated use of funds is for working capital and other general corporate purposes. This is a bit vague. While it is understandable, it would be more reassuring to know exactly how this money will be used to drive growth or improve operations. The reliance on issuing more warrants suggests they might be looking for ways to raise capital without taking on debt, but it does come at the cost of dilution. In terms of direction, SCWorx seems to be focused on leveraging its existing warrants to generate cash and potentially more capital in the future. The dilution factor, however, is a key risk that existing investors will be watching closely. The success of this strategy heavily depends on that upcoming shareholder vote and the subsequent registration of the new warrants. So, SCWorx Corp is making a move to get cash now and set up for more cash later, but it is a move that could spread their ownership thinner. It's a balancing act between immediate financial needs and long-term shareholder value. Alright, that is our breakdown of SCWorx's latest filing. What is your take on these numbers and what they signal for the company SFuture? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.